Welcome to PM Express Business Edition. Is it achievable? Can we reach a deal with the IMF by the end of this month? Well, that is the question on the minds of a lot of Ghanaians as government races against time to meet those critical preconditions before they get ready to go to the board to approve Ghana's economic program. Well, on PM Express Business Edition tonight, we'll be looking at whether Ghana can get a deal with the IMF by the end of this month, having met all the required preconditions as they try to get a slot to get the board to approve its economic program. I'll be engaging an economist, a finance person, an investment analyst, and also a financial consultant spread across all these areas to get us some deeper understanding about whether we can indeed get this deal as government has been promising us. And is the language also changing from getting a fund program by the end of this month to presenting a program to the board by the end of this month? Let's do some quick recap, get some deeper understanding about how did we get here, or what are we looking for in terms of the IMF program. Now, if you look here, we're looking at the extended credit facility from the IMF, that is the ECF level range. We've actually had a staff level agreement coming from the IMF, and we are targeting about $3 billion spread over 3 years. So this is what we are looking for in terms of. Now let's come to the reforms. What this program is aimed at: restoring macroeconomic stability, restoring debt sustainability, and a comprehensive debt restructuring. Let's look at protecting the vulnerable by strengthening social safety nets and also preserving financial stability. So that is the critical point that the program is trying to do. We also want to look at the reform that is looking at this program, addressing structural weakness, emphasizing on resilience into shocks, increasing domestic resource mobilization, and streamlining expenditure for fiscal consolidation. So, however, the staff level agreement is subject to the IMF management and the executive board approval. And that is what government has told us, that by the end of this month, they are hoping to present their document to get that approval. The approval also depends on receiving the necessary financing assurances by Ghana's partners and creditors. So what are the timelines here, some would ask? Well, according to the leader of the IMF team, Stéphane Rodet, the IMF cannot give specific dates, but rather if the creditors support this whole debt exchange program for disbursement of the fund, then that could be very soon. And we understand from the IMF that if, for instance, today we've been able to meet all the preconditions and we make a requesting for a slot, the board will meet and approve our program. So when the finance minister actually made a presentation to Parliament, he talked about the fact that the speed of the staff level agreement is quite a miracle. He's talked about all stakeholders should be on board to get parliamentary approval, and also they are confident that they will turn things around to help Ghana get this deal. So this was the assurance coming from the finance minister, that is Ken Ofori-Atta. So let's look at some of the preconditions that Ghana has to meet. We're looking at securing a deal with the domestic bondholders. Some are saying that the domestic bondholders, government has made some critical progress here. Also, getting a deal with the external creditors, and that is something that it's ongoing, so we can't say that they've met that precondition yet. Also, you have to publish the Auditor General's report on the COVID-19 spending, and that has been done. Also, review utility tariffs. Well, check, that is done. Get fund, road fund, and district assembly common fund reporting on provisional budget reporting. It looks like it is in the works. Let's look at also enacting legislations to achieve the 2023 fiscal target for primary balance, at least 2% of GDP. That is being worked out. Also, memorandum on understanding with respect to the zero financing between the Ministry of Finance and the Bank of Ghana. Well, that is yet to be done. And also passing some critical revenue measures. So if you look at 1, 2, 3, 4, 5, 6, 7, it looks like this one has been done, COVID has been done, review tariff has been done. We have to get something done on this one, and then also this one, and this one, and also those critical revenue measures that should be passed by Parliament. And looking at the nature of Parliament right now, one is really not sure whether they can get all these things. So these are some of the critical preconditions that they need to go through. Now, one would also ask that, what happens Well, if they're able to meet all these conditions, they will channel their request through the African department of the IMF. Now, that has to go to legal, finance, and other critical departments as well, before they also request for a slot from the IMF that, listen, we are ready. Can you prepare the board to get us something approved or not? And all these things are supposed to be done within the next 16 or 15 days. Is that possible? Well, that is up for discussion here on PM Express Business Issue. We'll take a short break and we'll be right back for a full discussion on this. Welcome to PM Express Business Edition. As we look at whether it's feasible, it can be achieved. Getting an IMF board approval for Ghana's economic program with the IMF by the end of this month. There are certain critical preconditions that government has to meet, and it looks like it is still some long way to go before it gets those conditions. Just like what happened to the staff level agreement, are you going to see the IMF grant Ghana some waivers? Or maybe not. Some are saying that, listen, the fund itself wants Ghana to get a program. So what is going to happen? Well, Yalate is a partner at accounting firm that is Deloitte. I hope I got the name right. He's here with me today. Y'all, thank you so much for your time. I do appreciate it so much. Interesting time, some will say.
Yes, indeed. And I think today is March 16.
Yeah.
And it's 94 days after you reach a staff level agreement.
Yeah.
So there's a lot to discuss.
A lot to discuss. Yes. Interesting, of course, Tio Champon, he is an economist, is joining us Vazun. Mike Kobler is also the chief executive of Synergy Ghana, an investment firm, and also he is an investment consultant as well. He'll be joining us Vazun as we look at what is happening and whether we are really on track. Let me first start with Tio Champon. He's an economist. He's been following much on this space. And Tio, for you, are you optimistic that something is going to happen so that the board will indeed approve our program by the end of this month or early days yet? I'm having a challenge connecting with you. But Joe, I mean, for you, being in this space, for you, what do you think that is? Do you think that we've come very far, or you think that it is still a long way to go?
Well, I mean, we've made some progress,
yeah.
To be honest, and I think we saw it as a long way, but we've made some significant progress. What I found intriguing was the domestic debt restructuring. With all the challenges, at least we were able to achieve about 85% subscription to the program. We know that the numbers kept changing, but I'm sure at some point, and for the IMF perspective, we made some progress. Some concerns have been raised about the external debt restructuring.
Yeah.
We've only seen a letter from the government to the external debt holders, but we have not had instance where some conclusions have been reached with external debt. We only saw response from the consortium of external debt holders.
Yeah.
So that conversation has to go, but we know what is holding back or what that condition is holding to, and that's China. China is not part of the G20 Common Framework Agreement. Yeah. And so you'd have to have a separate discussion with China before you come to the G20 members. And so that's where it gets tricky. When the discussion with China delayed a little bit, most investors got worried. Yeah. Because then it meant that our target of first quarter of the year, it was going to be delayed.
Yes. That's a real concern. Let me get onto the line that is Zoom and speak to Tio Champon. He is an economist. And Tio, I know you've been following this space a lot. And for you, end of March, I mean, I also get the understanding that the language is changing. First, we got the understanding that program approval. Now we are hearing from government saying that we will present our program to the fund. That is end of March. Now, we also have to book for a slot after going through all the processes, the African department, clearance to the various departments and all the rest. Is it feasible? Is it possible for us to get a board approval by the end of this month?
It's not, and I'll be very blunt on that. In fact, according to some of the data information and the assessment we're privy to, I think it's probably where you're talking May, thereabouts, in a best case scenario. And I'm actually on record as having said this. The reason is that, it's one thing restructuring your domestic debt, which is covered under your local law, and it's another thing with external debt restructuring. In this particular case here, there are four big players in the equation, each with different interests that we need to take into account. The first player, as Yao was saying, is China, but we also have the Paris Club lenders. So these are the 22 most advanced nations that give money to Ghana in the form of bilateral loans and credit, etc. Then you've got the World Bank and the IMF as one. So your multilaterals, you can even add African Development Bank in there. And then you also have the Eurobond holders, right? So these are the four big players within that architecture. And then if you look at our external debt portfolio, 29 billion USD, and if you break it down by these different or four players that I'm talking about, the Chinese, we owe 1.9 billion. So out of 29 billion, it's roughly just about 7%, right? But the Eurobond holders, we owe 13 billion out of the 29. So that's about 45% or 45 pesos of every 1 CD or dollar of debt that we owe to these external players. And the complexity really is that everyone has their interest, and trying to coordinate those interests within the timeframes that the Ghanaian government is talking about is extremely tight one. And even the evidence that we've seen in other jurisdictions recently in Zambia and in other places, even when China has agreed formally to be part of the creditor group with France, in Zambia's case, there are still issues as to how you treat certain categories of debt. So I think that the 31st, March deadline most likely would not be met, and it's going to go a couple of months down the line.
But Joe, can we remind ourselves that the miracle of the staff level agreement, weren't there some preconditions, some waivers and all the rest, and that could also work for us in this case?
Yeah, but that one you're only dealing with one player or one party, which is the IMF. This one you're dealing with multiple parties, especially if you take the Eurobond players, where you've already signaled to them that they should expect a much bigger haircut or loss than the bilaterals. That's what our government has told, right, the market. These guys are coming to the table to negotiate and bargain hard, and that process can drag. And hence why I think that the 31st deadline is very, very ambitious, and in my view, highly unlikely to be met.
But Doc, you are not even looking at April, May. I mean, that is, are you looking at the first disbursement then coming in, or the board actually meeting to consider a program request?
Yeah, there's the spring meeting. So why
in April,
why we were pushing for this is that the spring meetings of the bank would take place, April, late March, thereabout, and we could get something. But you don't need to have a spring meeting happen before the board meets to approve your program. The board meets independent of those, discussions.
Yeah.
And to organize your debt under the Paris Club, where China has raised fundamental issues. Basically, they're saying that even the IMF World Bank debt needs to be treated right under all of this restructuring process for many countries, and that hasn't been the case. The only kind of positive in all of this is that recently we've seen in Sri Lanka, the Chinese softened their stance a little bit in that regard. And again, if you look at our external debt portfolio, for the exposure we have to China, like I said, it's only 1.9 billion. That's what is being reported. So in the grand scheme of things, it is not as material as, for example, the Eurobond holders and the Paris Club members.
Interesting, Doc, and I'll come back to you again. But let me come to Yao Latte. And for you, you play in the corporate space, in the finance space, and are you also not that optimistic that looking at all these heads? Because I asked Dr. Tio Champon about the miracle of the staff level agreement and the fact that as we speak right now, we need to get some laws passed, revenue measures passed in Parliament. Looking at the current position of Parliament, quite a difficult one as well. We need to reach agreement with the external creditors. That also is another challenge. He's looking at May. Are you also looking at May or June, some would say?
Well, I'm not surprised, and I think in addition to what Dr. Tio Champon said, I've seen other analysts.
Yeah.
I've been reading the economic intelligence report and all, and they put it mid-2023. So it is easier to say by mid-2023, that is June 2023,
wow,
you will achieve, because it's overly ambitious to say the first quarter of the year, particularly when you have some other revenue measures that you have to put in place to secure a program.
Yeah.
And the parliament that we have is not the parliament that we had when we went for other IMF programs.
2 programs,
You could actually pass a lot of these policies and programs, get them approved under certificate of urgency. Now you can't do that. And so for us to start thinking, the first quarter of the year is almost over, so we should look at the second quarter of the year and then probably accelerate it a bit and have, maybe Dr. Tio Champon said, by the end of May, reach some level of agreement. And by the middle of this year, we know that we are moving into an IMF program. We have everything set out. And I think that's a realistic.
There's a bit about market expectations and government communication. And I'll be coming back to you on that about, because first you heard government saying that we're going to get a program. Now the communication is about submitting a program to the IMF board by the end of this month. And you have to do all these things, get a slot as well and the board to meet. Let me bring in my cobbler. He's chief executive of Synergy Ghana, an investment analyst as well. How is the market reading this? Is the market expecting it? I mean, your latte is talking about the economic intelligence unit projecting middle of the year as well. My cobbler, what are the investors saying? What is the gossip in the investment community about Ghana's program and the preparedness for this program?
Yeah, good evening. Good evening, George, and good evening to your loyal listeners. My views are not very different from what Yao and Dr. Tio Champon have said. I think the signs are very clear on the wall that looking at the various stakeholders involved, this is not, looking at the end of March will be more than a miracle. We need more than a miracle for that to happen. So realistically, I think investors, everybody's looking towards the mid of the year. And, you know, in the investment community, uncertainty is something that you want to avoid. And so it's better for us to have the same kind of voice and be very realistic about the projections that we are making. And rather, in the intervening period, say, whilst we wait for the IMF program to kick in, these are the measures that we are putting in place on a fiscal level, on the other levels. Because look, 3 billion is not a lot of money over a 3-year period. We're looking at about, if you are disbursing about $1 billion every year, what would the impact of that actually make in the economy? Looking at the quantum of debt that we owe. So whilst we are waiting for the IMF program to kick in, what we should rather be doing and addressing investors continually is what are the measures that we are putting in place to ensure that by the time the IMF program kicks in, we have put our house in order and the economy is on a certain trajectory to experience the kind of growth or turnaround that we expect. I think that's the kind of dialogue that investors are expecting. If we don't address that uncertainty, people will still be waiting and will adopt a wait and see approach. And that's what's happening in the investment world now. I mean, most of the transactions that are happening currently or on the table, in the pipeline, investors are waiting to see how the IMF discussions pans out and when we are able to reach that fiscal agreement. It's important that we set ourselves a realistic timetable and work towards it. And whilst we do that in the intervening period, we actually address investors and tell them what measures we are putting in place within our domestic setting to make sure that once we tidy up our debt restructuring, we come into, the IMF program kicks in, the fiscal side are being tackled. What are the things that we are doing to make sure that we bring back that investor confidence that is much deserved.
But Mike, in stock market, companies be on the stock exchange and all the rest, when they price a risk or anticipate a risk and they are aware already, the shocks would not be bad. And for a lot of people, now the city is fairly stable, things is going quite well for us. And again, I refer to your latest comment about EIU capturing that in their report, which I know that the market that they capture in terms of information spread. Do you think that the market has priced this risk that, listen, the program might do a little bit, so we won't see any negative reaction coming from the client that you engage and the space that you operate in?
You know, Dr. Champon mentioned 4 categories of debt creditors that we have. I mean, the Paris Club, the World Bank, IMF, the Eurobond holders, and all that. Don't forget that so far what we have done successfully is the domestic bond side. That is what is certain now that we have reached some conclusion. The rest nobody knows. And in terms of pricing risk, you cannot price this risk when there's uncertainty.
But Mike, where lies the uncertainty? Because if, for instance, I know, I mean, a firm like Franklin Templeton will be taking the advice coming from EIU about the fact that, listen, looking at the way things are going, the March ending is not possible. And therefore, for Franklin Templeton, a Bank of America, they are looking at alternative source of information about this program. Therefore, they would not react negatively. So what else again do you want, some would say?
They will just wait and see how these discussions pan out. Because based on, I mean, the question is that you have been given some preconditions under which the IMF will kick in. Okay, if you don't meet those conditions, what happens? What is our plan B? Do you, George, are you aware of any plan B as we speak?
You know,
should anything delay? I mean, even though the EIU and all the Economic Intelligence Unit have said all that, assuming today it happens that we are not able to reach conclusions with China, with the Paris Club, with the Eurobond holders, what is our plan B as a country? Do you know?
Yeah.
So that's uncertainty.
And with this uncertainty, cost us or not? Because some are saying that, listen, we're all expectant. The program is coming in, and I'm worried about the negative reactions and what can be done.
We need to communicate. I mean, like I'm saying, we need to be very clear that whilst we are even waiting for this to happen, these are the measures that we are putting in place. And we've done January, we've done February, we are in March. March is about ending. April would come. Whilst we are waiting and whilst we're having all these discussions, what are the other things that we are doing? How are we tackling our fiscals? How are we dealing with the other side of the debt restructuring program? I mean, how are we tackling that? Okay, we need to communicate a very clear, coherent plan. I mean, to the investor world, to our debt holders, to our creditors, and tell them exactly what we are doing in terms of cost cutting. Show them the impact of what we have done so far. We've put some policies in place. I mean, we've run 3 months. What has been the effect of those policies so far? Are we achieving the results? Are we achieving the targets? If you're able to put those things out there, we must say it loud enough for investors to get convinced. And then, I mean, those who are waiting and seeing will say, okay, for what is worth, let us take the risk that and assume that this is going to happen. So if it's going to happen, then we should put our money there. Otherwise, I mean, you know, they say investment is very fungible. And so Ghana is not the only investment attraction that we have. I mean, people will have other alternatives. So in the places where there is certainty, people will rather prefer to put their resources there.
Before I bring Dr. Tue Champon in and I also come to your latte about whether government communications should change as an economist, I mean, behind the scenes gossip we hear is about the international players, USA, the IMF, they want Ghana to succeed and all the rest. Does any sentimental thing play in the investment space? The big players. Listen, Ghana has suffered already. We've had enough challenges. Is that sentimental feeling and touch, and Ghana, the rising star of Africa, America wants us to get a program, could that come in to save us? So that, listen, we are down already. The credit rating agencies and all the rest, we've suffered enough punches. Could we go down further again? Mike?
We need to re-engage this, what do we call it? We need to we need to re-engage the credit rating agencies and sell our story. Okay, that's the beginning. To tell you about sentiments, yes, everybody wants Ghana to succeed. Yes, we all want Ghana to succeed. The investment community wants Ghana to succeed, but the other countries, I mean, as well. Okay, so you have to put your best foot out there. It is a competitive world. So yeah, people, you might be a very beautiful bride, but the other brides out there. Okay, so why would people come and put their money in a place where they're not too sure what is going on? You know, so that is why I'm saying that you need to create some certainty, okay, and to sell your story out there and make so much noise that give a compelling reason why people should put money. People are not going to put money in Ghana because of sentimental reasons. Forget it. I mean, yeah, they like us very much, and people have made investments here in the past, and they want those investments to succeed, and they want to make further investments, but they want to be assured that going forward, we are putting the right structures in place, and we're putting our act together.
Dr. Ture Champon, should government's communication change? The last time we heard a government official on this IMF program was when the president gave the State of the Nation address. And if I should get his line right, we are hopeful of submitting a program to the fund by the end of March. And the official communication is that end of March. Well, some will cite the staff level agreement miracle and hoping that it might happen again. Should we change the communication?
I mean,
I get you, but should we change the communication now as well as the backroom engagement?
To take us back one step, the staff level agreement wasn't a miracle. You have to go back. The government said they submitted a proposal in July, and they were pushing to get this thing done by August of last year, right? Or September of last year. And some of us actually said that it takes at least 6 months from submission to getting staff level approval. So from July to December, it's not a miracle. After all, Egypt did something similar within an 8-month time frame in Kenya and other places. So let's be a bit clear on that front that the staff level agreement wasn't necessarily a miracle in and of itself. The timelines are pretty clear on that front.
Okay.
But I think Mike makes 2 important points, and I'll tie it in with the issue of the communication, right?
Yeah.
Which is, what do you do now in the interim to assuage the market that you have started putting, to borrow Mike's word, your house in order, right? So all the things that we communicated and said we'll be doing in the 2023 budget that was read in November of last year, and some of the reform initiatives that we've been pursuing, what are the outcomes? At least we've had a quarter, so we should be able to see those and report on those from a communication point of view. Then there's also the issue of, okay, if this doesn't happen within the timeline, as you asked, how does the market, take all of this into account? I think for many of the market players, certainly on the international side, they have already priced in the risk. Okay. And you can see it somewhat in the trading levels of our Eurobonds, right? So currently, it's about 30, 40 cents on the dollar from at one point almost 80 cents right before. So many people, and even some of them, have even started talking about asset write-downs, you name it, on their balance sheet, etc. So I think the market sentiment and expectation is that yes, Ghana would get a deal. Yes, we would have to take some hit in terms of haircut. The issue is it going to be evenly spread out so that all the different creditor categories would, burden share in a sense. And that's where the bone of contention is. But I think the key thing in terms of communication, really, from a government point of view, is to tell the story of where we have come so far since we made the announcement of going to the fund in July, and since we got the staff level agreement, till the positive one on the domestic debt restructuring, because that's a big achievement to the credit of the government. But especially what we're doing on the fiscal side of the equation, your revenue and the expenditure and those controls that we said we're going to put in place to bring down, government spending and cut back on some of the sort of programs, etc. We need to demonstrate that to both Ghanaians, but to the market very clearly that we've made some gains, and we're not necessarily waiting for a full IMF program in a sense before we start doing what we should be doing anyway. That would go further to actually assuage any sort of residual fears or residual sort of negative sentiments that people may have.
Do you think that we should lobby the fund for any conditional statement being put out as well?
I don't think the fund will put out the conditional statement until the program comes about. Everything is in our booklet. We can put whatever statement out. At least every quarter we have the fiscal statements. Let's put those fiscal numbers out there. Let's tell the story of what we're doing to scale back on some expenditure items. Let's tell the story of what we're doing to raise, more revenue. Even things like the gold for oil policy and all these things, they all tie into a bigger agenda of trying to stabilize the exchange rate. But the stories are disparate at the moment, and it needs to be told, in a more sort of coherent manner as part of that PR or communications drive.
Doc, I'll come back to you about the bit about the show working bit, and that people want to see more. And for you, you're lucky. I mean, you work in a space where you engage a lot of corporate firms, work on their books. Again, what is the gossip about the timelines? And again, are they now realizing that, listen, and Doc would disagree with me, unless there is a miracle, we might not get a program by the end of this month. They're looking at somewhere in April or even in May as well. What is the gossip in the corporate community, and what are the necessary adjustments they are making? Because the fear could be that, could the local currency take a hit? What are the other things that should happen as well?
Yeah, so George, I'll give you a very good example. So last week I was in the Southern Africa region. So I've been away for a few weeks. And in one of the conversations that we were having after lunch, I met one of the Pan-African insurance firms. And the first question they asked is, okay, you are from Ghana. What happened to your bonds? Then I asked him what happened. He said, what happened to your bonds? We invested so much in your bonds because we believe Ghana was one of the rising stars in Africa. But we have had to write off at least 30% of our investments in the Ghana bond. That's a Pan-African insurance holder.
Yeah.
And there's one investor from Africa. So how many such investors, international investors, reputable firms, are taking a write down or write off, as you, Champon, said?
Yeah.
So for me, it's back to the question that you asked about what should be the communication. The communication is what I will put in the 3 C's.
Yeah.
It must be candid, consistent, and full of candor. Candid because we have to face the realistic situation. Some of the revenue measures in the budget have not been operationalized as we speak.
Yeah, because they are struggling to get approval from Parliament.
They have not been operationalized, so we have to be candid. What are the realistic timelines to get these revenue?
But what can government do? Because the same argument was made for e-levy, that because it delayed. I mean, should government itself realize that looking at the current structure of Parliament, the posturing, the engagement should be different. It cannot be business as usual.
Yes, which is why I said candid. Let's face the reality. Tell the investor community. And the investor community, some of them have decided. Some are still doing the wait and see attitude, like Mike alluded to. But there are others who have taken their decision. There are others who will sell off their investments cheap.
They won't come back?
They won't come back again.
Wow.
Others will just close shop and leave. So let's be candid. Let's tell the investor community what the reality is, what the realistic timelines are, and let's be consistent. We know that
flip-flop is too much,
debt restructuring program, from when it was first announced to date, there have been instances where inconsistency in government communication, it cost us a lot. So we also have to set out consistent message. Now we are hearing that that's a timeline for submission What does it mean? If it means that we are submitting by April or by May, it means realistically it's anything from the middle of this year. That is when we will start seeing something happen. And then we also need to appreciate that the longer this discussion drag on and on and on, the more it's going to cost us as a country. Because our currency responds to some of these developments in the market. And so if our CD has been fairly stable, let me put it that way.
I mean for quite a month,
it's been fairly stable.
Fairly stable, yeah.
We want to keep it at that because it helps avoid the price instability that we've had in a couple of months prior to. So you can see inflation taking a declining trend.
Yeah.
And if the stability continues, you see the declining trend continue.
Yeah.
But if you continue to have inconsistency and instability in the way we are seeing the market forces, then you can't predict. And when you cannot predict, investors will shy away. They will continue to adopt the wait and see attitude, and it will continue to affect.
So some will say that, I mean, they asked the question about now who caused some, you know, and whether anything can be done. Because, again, you look at Parliament and revenue measures are not being approved. You are struggling to get. There's a bit about zero financing, which we understand that the MOU is done from the Bank of Ghana's end. It's been submitted to the Ministry of Finance. We are yet to see whether the minister is going to sign it. Maybe he hasn't got an option. But it appears that things are delaying, and you don't have Parliament on your side. So some are saying that the posturing and everything should change on the part of government to win over the opposition, to get this thing done. Listen, we have just one country. Yes, we have made some mistakes in the past. Going forward, we are in a quicksand. What should be done, ABCD?
Yes, so George, like I said, I was away, you've been around, and you follow the news more than whilst I was away, what I was reading in Parliament was a CI.
Which more getting more like voters.
So
listen,
maybe
that
there were
takes
other
priority
things that were being
than this one.
As far as I'm aware, that was what I heard was happening. And so we have to prioritize our revenue measures. Get them passed as soon as possible. If we get them passed, operationalized, by the end of the first quarter of this year, we'll be in a good position to achieve some of our revenue targets.
You think it's possible?
I am confident that if we get them operationalized, we put them, like I said, under certificate of urgency and get them to work. Because what happens is that once the budget is announced, and this way back in November, corporate bodies and even individuals start working out their systems to ensure that they accommodate government policies. And so they are waiting to receive the communication and start working on them. But once the law has not been passed, you cannot action them. So if corporate institutions, individuals are waiting for government to implement the tax policy, and here we are, maybe taking or putting other things as a priority over our revenue measures, then who caused some?
I asked you the question about the posturing of businesses in the local space and all the rest, what they are saying, the plan B, the sentimental argument that I raised, you know, we're going to get this thing, you know, April, May, June. So listen, there's no cause for alarm. Do you get that wait and see thing, the sentimental touch? Or listen, well, if things are not going well, I will react. I mean, I'm not for the Christmas. These are millions of Ghana cedis have been invested in ABC space.
Yes, so the good thing is, if government does not even have a plan B, I'm telling you for a fact that the corporate bodies, they have a plan B. And some of them have started working on their plan B. Because we promised March, the March is not realistic. We are working to middle of the year. If in the course of the second quarter, there are signs that we are unlikely to achieve middle of the year, people will start actioning their plan Bs. So you've seen corporate bodies trying to find a way to manage, particularly the FX impact on their investment. So they are either changing contracts to currencies that are stable or currencies that will protect them or hedge them against the fluctuation of the local currency.
I'll come back to you. You're not, I mean, asking that what should be, and since you work with businesses, what should be the plan B of businesses going forward, irrespective of whatever that happens? And let me get to Mike Kobler. I mean, Mike, I mean, I get your argument about communication, and sometimes you engage certain people in government and They are not comfortable with such conversation going on. The argument is that, oh, we're going to get the program. Keeping investors in the dark and being optimistic is a terrible thing to do.
Yeah, I mean, keeping investors in the dark in fact, it's not advisable. It's not advisable at all, because I mean, at the end of the day, you want people to. I mean, investment is what drives the economy, and so if people are not getting the clear signs as to where we are headed, I mean, they will keep their money. And there are even individuals who currently are wondering where to put money. You are getting calls all the time. Where should we really put our money? Based on what that is
I
going
also
on.
get that call from people.
Yeah,
Mike.
exactly. I mean, so I mean, if individuals are worried about where to put their money, you can imagine what happens within the local corporates. And look, international investors also draw a lot of inspiration from what the locals are saying. So they test the waters to see what do people think. So it's important that we do not shy away from. I mean, we have to be optimistic, but then we also have to be very realistic. And I like Yao's point on candor, and consistency. I think it's very, very important. I mean, credibility is priceless. I mean, and we have to know that it's not all about politics and the political talk and all that. If Ghana doesn't go well, it affects all of us. I mean, it affects each and every person in the economy. It's important that we all realize that we are in crisis and we join forces together to build this nation together.
But Mike, some would say that shouldn't that lead be coming from government then, in terms of communication?
I mean, exactly. That lead,
the opposition will be the opposition on any day. This bold step should be taken by government.
Absolutely. I mean, in terms of even passing all these revenue measures that we have spoken about, I mean, we have to change the approach in terms of how we engage the opposition, how we lobby them, how we sell the story. I mean, at the end of the day, the opposition will be in government one day. So it's in their interest to make sure that at least the country is stable in a manner that they can also be able to govern the country when they are in power. You understand? So we need to dialogue. We need to, I think that we need to, and this dialogue thing has been hammered so many times. And the posturing, I think we need to make sure that everybody is on board. We are in this together. And if we are in this together, we must establish a basis of trust, okay, and be transparent in the things that we are doing. For everybody to be on board, for all of us to be on the same page, okay. If we don't do that, and we still create a scenario where we feel that, okay, some people are more comfortable than others, then obviously people will fight the system and people will throw all kinds of things and speculate. And the kind of condition in which we are, the last thing you want is speculation. You don't want to speculate. You want the bare facts to be put out there. It's verifiable. Everybody knows that we should keep an open book on the economy for everybody to know this is where we are headed, this is what we are doing, and this is what we've done this in the past, we've made mistakes, but this is what we are doing to make things, turn things around and to make things different.
Mike, are we already benefiting? And be candid with me, you engage your partners outside and play in this investment space from the risk that the end of March is not possible. I mean, the currency has been fairly stable. Some will bring in the debt exchange program and its impact and all the rest. We've seen other things playing in our favor and all the rest. Can we say that those investors who move this market have already priced that risk and therefore they won't take any action that is going to complicate things for us?
Yeah, George, I'm sure that, like Doc said, they priced it in already, and in their projections, this is not going to happen until the middle of the year. I mean, I don't believe that anybody's expecting that the IMF thing will be concluded by the end of March. It's not going to happen.
Dr. Tue Champom, what should be the plan B? Let's look at the economy as well, in terms of government's plan B approach, and whether the economy can absorb the shocks if there is even any delay as well. Because some are saying that we are on the tight ropes now, we are on the quicksand now. And some are even surprised how things are even fairly stable now.
Yeah, I think some of the worst excesses, from where I sit, perhaps at first, the most difficult period was the process leading up to the domestic debt exchange and the attempted panic withdrawals of people wanting to, take their monies out. But I think since that time, we've seen quite a number of positive developments happening already. And that's what, in a way, also gives me confidence that even if this does not happen by the end of this month, we will still be fairly okay. Number one, off the back of the debt exchange, we've seen the treasury bill rate come down, right? By almost what 11, 1200 percentage.
But so let me
basis
make
points
a
or
rude
12%.
intervention there. Some are saying that that artificial drop is not good because, listen, inflation-wise and all the rest.
Why is it not good? Yes,
Yeah.
the inflation argument in terms of keeping your money or the value of the money is one thing, but you need to look at it purely from two different angles. What that means for an investor, and then number two, what that means for the broader macro stability or macro fiscal framework of the country, where the central bank has to ensure price, right, stability. But number two, given the issue or the fact that there aren't that many investment alternatives, Mike yourself just said people are calling you guys and asking for where to put their money, right? I think the wind is with the government as we speak currently. And so they've been able to drive or force down the rate down. Inflation has turned the tide and it will start coming down gradually. It's going to take some time. But I think these are important developments that we need to take cognizance of. The only other risk I see is that if government attempts to drive down the T-bill rate further below just about 15%, which is what they are offering on the long-term bonds now, then people may decide not to give or loan to the government. So you don't get that big subscription, and they may decide to want other alternatives like buying dollars, and that then puts the pressure on your CD all over again. But to the extent that we're able to drop down the rate to, in my view, a lower ceiling of about 15%, we should be fine. So I think the worst is in a way past. We're still in the eye of the storm, but nowhere near the big crisis that we would have had back in January and in December of last year.
And yeah, I'll be coming to the bit about the economic strategy or what will be the plan B of the communication as well. And this is PM Express Business Edition. I mean, we understand that due to how interesting the discussion is going, we have an extension of this program to 10:30 to conclude the discussion in terms of the IMF program, since it concerns everyone and the economy as well. And so we'll be taking a short break, and we'll be right back. This is PM Express Business Edition. If you've just joined us, as PM Express Business Edition, we're looking at Ghana's program with the IMF. Can we secure the board approval by the end of March or not? Well, Dr. Joe Champon is an economist. He joined us via Zoom. Mike Kobler is CEO, Snage Ghana, investment analyst, joined us on Zoom. And Yalati is a partner at accounting and auditing firm Deloitte. He's in here with me in the studio. So, yeah, I'll come back to Doctor very soon. But I was talking about what should be the strategy for businesses going forward. Yeah. As in, listen, so that we are not overtaken by events. What should be the strategy? If I am George Wiafe and Sons and imports and all the rest, we've taken hits already as a businessman, the banks. I mean, today, you're reading a report on Bloomberg talking about more than $400 million write-off on their books because of this domestic debt exchange program. They are down already. What should be the strategy going forward? I.e., whether the program will come on or not.
Yeah. So I think I'll look at it in some parameters that a lot of businesses understand. One of them is the estimated growth in our economy. I've seen some analysts downgrade or reduce the projected growth of the Ghanaian economy, that we expect to have GDP growth of about under 2% in 2023. So we should not overly estimate the growth and the rise in economic activity. Yes, people are buying and selling, but at some point it will slow a little bit because of the sustained effects. There are some risks in the system, and those risks continue to linger. The effect of the Russia-Ukraine war has increased the import bill of Ghana. And so we are likely to have, that's why the exchange rate is still over 12 and still around that area. Secondly, we also have the issue of some pre-election tension and all. There's also been this terrorist attacks that's likely to happen. It's not real, but they are still, and so investors are concerned about that. So those who are projecting growth, I'm sure they should continue, or they should reconsider the projected growth. Secondly, it's also on the side of inflation. Inflation is likely to, yes.
The first time food inflation is going down.
It's going down, which is good. Yeah. And for food inflation, we know that it's seasonal.
Yeah.
And so when we get into the seasons where particular food, particularly the staple foods are coming to the markets, it's likely to go down. But then the non-food inflation, that aspect of it is driven by the exchange rate. So if we are not able to address that issue, we are likely to have that problem. And then also, because all of this is about the 3 Fs. I like to put them in acronyms so that you're easy. So the 3 Fs are the price of food, fuel, and financial conditions. So we know the price of fuel is caused by the international market, and we are benefiting from the gold for oil. And we hope and expect this will continue. Fuel or food is what we've just discussed. And the last one is financial conditions. I am advising businesses that access to credit may be limited.
It is going to be affected badly.
Of the effects of the DDEP on some banks, on commercial banks in Ghana.
Some are already going to post losses, actually, when the results come out.
Those who are estimating some source of funding, particularly from the banks, should also take another look at that estimate, because access to credit will be limited to a large extent, and that's something that business should take note of.
Dr. Ture Champo, you're making a point before we went for the break, and the bit about the plan B. Can there even be a plan B, coming from government with respect to however things will play out for this fund program approval?
The government's plan B, even before the IMF program, they were saying they had some homegrown policies, very much like what happened during the Doomsday years, if you recall. And it's really around growing revenues, and it's also around on the expenditure side of things, trying to live within its means. Often we see the government being much more aggressive on the revenue side of the equation, and sometimes less so on the expenditure side. And in the last few weeks, we've seen the government go after various multinationals, from the likes of MTN to Talo, you name it, for setting back taxes that they claim is owed them, only to change tone at sort of the last minute. So in all of this, I think the plan B, if any, is anchored on the budget, but with some revised numbers that reflect the current market sentiment or current market, conditions. I already indicated earlier that I think we have seen the worst of the current crisis or impact, in the sense of inflation, in the sense of even the exchange rate, because you've seen a bit of relative stability. And I also don't think that we're going to get that hefty portfolio outflows like we saw last year, right? Even on the import side of things, to your point about food and fuel, and then he said financial conditions, the thing that do is that we actually for a very long time have been running a positive trade balance, right? So we actually are exporting more than we are importing. Last year, we exported just about $17 billion worth of goods and services, predominantly commodities, right? And then we imported just around 14 point something billion. So the trade balance is positive, and it has been positive for a while now. The issue is not about import and export. The issue why the currency is actually struggling a bit is more on your capital account and your balance of payments, where because you have a lot of these portfolio investors who come in and they move their money when market sentiment shifts or the US Fed hikes up rates, things like that. Then quickly you need to find a lot of dollars to actually service, right? Those portfolio outflows. That is where we've been taking a lot of hits on. So if you look at the numbers, your current account, your capital account consistently is being negative for a while now. So you're gaining on your trade side, but all those gains are being eroded on these two additional metrics that I'm talking about because of the way we've opened up the economy. In my view, over liberalized it, and you have these big portfolio outflows.
Interesting. I mean, so for you, do you think that these things, government should take certain practical steps in that area? Some are saying that when it comes to expenditure, we're still not seeing much from government in trying to rationalize the expenditure.
It's hard because everybody's trying to protect their turf. Some of the MDAs are trying to protect their turf, but also because on expenditure in the budget, we saw one big number, but we didn't get the detailed breakdown of which line areas, which ministries these cuts are going to come from. And then quickly on revenue, we've got 3 bills that are still outstanding in Parliament. There's the income tax amendment bill, there's the excise duty bill, and then the new one that is replacing the fiscal stabilization, the growth and sustainability levy. All those ones are still pending before Parliament. But there are even issues, even if you pass those bills, right? A number of the people you want to collect these monies from, like in the mining sector or in the oil and gas sector, they have other contracts that have these stabilization provisions. So it's going to be difficult collecting those monies from them.
Interesting. Let me go to my cobbler and let me find out from you, again, the bit about going forward and what do investors want? Because whether an IMF program or not, we will still want to look beyond this March, May, April, June deadline to still attract inflows into the economy.
Well, I tend to be a bit optimistic on the credit squeeze side. That, I mean, if since there are no alternatives, I mean, beyond government paper to look at, banks would have to be more creative and begin to look at very quality assets or quality companies that they can lend to. And so companies that have keep very good books and they have their very good contracts, have offtake agreements. These are blue chip revenues that they can actually approach financial institutions and maybe ring fence those contracts and then be able to access credit. So those companies that have very good off-takers might be able to attract more credit. So it depends on the kind of business that you are doing and how you can leverage your portfolio. So yeah, I believe that going forward, based on if Treasury bills fall, the other alternatives will be to look at good quality assets on the market and go after them. So it will be an avenue for businesses that are on a growth trajectory to get more maybe funds, because then at least the interest that you'll be making from those companies are more than what you'd have gained if you put your money in Treasury bills. So the banks will have to balance their portfolio somehow and make sure that they de-risk part of their portfolio as it stands. Beyond that, companies also have to look at cost-saving measures. I'm told that there are some institutions that in the past, when they had to do local travels, maybe the executives would be on an airline to Kumasi or Tamale, and then they would drive by a 4x4 all the way to Kumasi or Tamale for the drivers to meet them. I'm told some companies are scrapping all those policies. Wow. And renting, they rather rent cars at the destination that they are finally going. So people are putting in all kinds of cost measures here and there. Let me also say that, in situations like this, what you don't also want to do is to overly punish your employees also as well, because then employees are the ones that if you motivate them, they are the ones who are going to go out there and bring the kind of income that you expect. The tendency is to begin to look at slash worker salary or or slash allowances and things like that. I'll say that institutions must be very careful and go slow on stuff because already the taxes are very high. I went into a shop and I bought something and I realized that the tax element was almost a third of the cost, VAT, all kinds of.
I think we're having a challenge with it. And let me come back to you, Yao Latte, about the bit about going forward in terms of the outlook. For you, are you that cautiously optimistic about the outlook? Because Dr. Champon is talking about, we have seen the worst, you know. We're already down. I don't know what else you can, unless the earth swallows you. Are you that optimistic in terms of the outlook? And also, what should be, again, government posturing going forward? Because whether an IMF program or not, there's an economy to run. There are citizens to feed. There are people who have to work and get things done.
Yeah, so I think just to add to the point that we made earlier, that the outlook is not as gloomy as we had last year. Last year, we didn't know what the IMF program was going to entail. We didn't know when we were going to get staff level agreement and all of that. But this year, we have a staff level agreement. We have some prior actions that we are currently working on. So there is some level of visibility. It's just that we have to have realistic timelines and work towards. And so when you have some clarity, it helps. And so what we need to do is to, like I said, just come up with realistic policies and then work towards them. There are also some things that could work in our favor if we negotiate well. I'm looking at our debt portfolio, as we discussed before, and other countries that have entered the program. Ghana is the 4th country after Ethiopia, Chad, and Zambia to go through a program that we are currently going through. Angola went through a similar program, and China agreed a 3-year debt relief for them.
And
we've seen a similar thing in Sri Lanka. So it is not an elephant.
We should be that happy that China is softening its stance when it comes to this whole credit thing.
I mean, my corporate law lecturer will tell you the best way to get money out of your creditor is not to kill him. You can kill him and take whatever assets you have, but that doesn't pay you.
But Yao, I mean, just to quote directly the lead for the IMF negotiations, and I stand to educate it, the communication was that we just want commitment from these partners that they will participate in this program, and not necessarily a signed-up document that we are cancelling Ghana's debt. So the negotiations is not about getting that firm agreement that we are cancelling Ghana's debt, but even the commitment that they will participate in the program might be enough to go to the board.
That's a very good point you've made. And I was trying to end my point on Angola. That in the Angola situation, what they did was that they took advantage of debt service suspension initiative, which we failed to take advantage of. So that actually helped them in the negotiation. So for us, because we failed to take advantage of that, even though Angola's exposure was $20 billion relative to our $1.9 billion, they were able to achieve a program. So it is not all doom and gloom. There's some positive, and we should work towards them. What we should focus on is to consider or look at what are the priority areas. Some of the priority areas we've discussed are just making sure that revenue measures that were outlined in the budget are operationalized. It will take a while for them to come into effect, but if we start the process now, at least by the end of the first quarter, they would have all been taking effect, and then we will start benefiting from them. Secondly, the communication. The communication to investors must be consistent across board, both local and international, or domestic and international. We have to manage the communication and be consistent in our communication. And also, our engagement with our partners. We still dealing with international partners regardless, whether we have an IMF program or not. There are international partners who are supporting some of our programs, livelihood for life empowerment and all of that. So we still have to continue engaging them because all these institutions and these participants are stakeholders in our economy. And I tell you, the fact is that an IMF program alone will not take us out of the economic situation that we are in.
Interesting.
We need other stakeholders to come on board.
That is interesting. Dr. Ture Champon, I mean, have we seen the IMF program thing as the ultimate savior. And that could also be another thing altogether in terms of the expectation.
I think in the short term, it is, you may say it, it's somewhat of an adjunkwa, right?
Yeah.
A savior in the tree balance. But in the long term, the evidence on IMF programs across the world and whether they actually help countries to turn the corner and deliver sustainable economic growth and address issues of poverty and inequality, the evidence is quite mixed on that. In fact, in many instances, you actually see that the reverse is what tends to happen. And that's largely because the IMF only comes in to help you deal with one symptom of a bigger problem, right? In our case, we said we have a balance of payments problem, and they say, okay, do some structural reforms, get some debt exchange, etc., and then come and then we'll give you some money to do that. But the IMF doesn't help fix your governance issues. What actually is causing us to have those effects in the first place, the root causes. And that's where I think the deeper conversation for us needs to go. What kind of Ghana that we want? The political system or the governance system that we're running? Because if we don't fix that, we all will be here in 5-6 years time. We'll be going back there again for the same thing. And the history bears us out on that. We've been going there since the 60s, and almost every 3.5 years we're there. And the reason why we're there is because we have not fixed the problems that needs to be fixed in terms of the governance issues, the soft underbelly that gives rise to all of these excess spending or reckless spending, and the fact that the gains of the development is not evenly spread. And I worry because we've also become, myself included, we've become fixated too much with all these macroeconomic statistics, right? GDP growth, inflation, lending rate, etc. But it's not translating at the micro level. So you have deep issues of poverty, you have deep issues of inequality, and deep issues of people not being able to see the development dividend. And we need to bridge that gap as a people.
And I know the TUC and all the rest. Should we also get to that point? Because some are saying that there is always the good, the bad, and ugly about an IMF program. And maybe we should also come to appreciate that as Ghanaians.
I think Ghanaians appreciate that. We've seen the good, the bad, and ugly in the past. We've seen it from structural adjustment, PAMS card, etc. The evidence is there. Anybody who cares to read. We've seen the evidence of that in terms of the devaluation of our currency and the idea that if you devalue, then necessarily manufacturing will pick up and the economy will. All of that didn't happen. We've seen all of that in the past. And even the IMF, World Bank, the Bretton Woods institutions now recognize that some of those austerity policies that they were pushing a few decades ago have not worked. So they need to change approach somewhat. And I think for us as a people, we need to go to the negotiation table with these things at the back of our mind, right? That it's not just a conversation about let's grow the economy by 7%. It's not just a conversation about bringing down the debt, but what does it mean tangibly for people on the ground in terms of jobs, in terms of reducing inequality and poverty and all those things? That's really where then you begin to connect or bridge that micro and macro divide.
In trying to wrap up with you, Doc, and come back for your final word, I'll be coming back to you about the outlook, and for you, are you that optimistic? Let me shift to Mike Kobler, and for you as an investor, and the bit about the outlook, quite optimistic, thinking that, listen, we have seen the West.
Yeah, George, I think we've seen the West. What we need to do is to ask ourselves what is the Ghana that we want to see in the next 5 to 10 years. Okay, and that is not something that we can. I think that is something that we have to have some kind of broad consensus on how we want to deal. All these social interventions that we are doing Are they reducing the desired impact? How is it that our graduates are not earning the kind of salaries that they need to earn for them to find Ghana attractive to stay here? What can we do differently? I mean, and that's the kind of dialogue that we need broad consensus on in terms of how we need to do it. If we don't have that dialogue now, like Doc said, we'll go back 3.5 years, 4 years, we'll come back to IMF again. And that's not something that we think that will be sustainable. In terms of growth going forward, we have so much potential as a country. We still have the resources that we have. I think that value addition is something that we must change the dialogue and say, for all these raw materials that we're exporting, how can we bring in value addition to make sure that we get value for money going forward, and to create the kind of prosperity that we want our citizenry to have. If things are not working, whether they are promises that we made in campaigns or whatever, we should come clean and say, look, we said we're going to do this, but realistically, we cannot afford that in the present state in which we are now. And I believe that people will understand that if we know that we can make those sacrifices today and get a better results tomorrow, I think that is what we must all be aiming at doing. So yes, the future can be good, but it depends on how we orchestrate that future for ourselves.
Dr. Thierry Champon, your final thoughts as you run the program down and wrapping up in the outlook as you wrap up, Doc.
Yeah, so I indicated I'm quite optimistic on the outlook. The worst is behind us. We're still in the midst of the storm. We will get a program. We will start implementing some of those reforms. We need to increase revenue. I'm actually particularly keen on looking forward to the implementation of the property rate system. That is quite interesting. But of course, there's still one or two risks that we need to be on the lookout for. We haven't discussed this, but the cocoa sector in Ghana, the massive exposures there that needs to be addressed. And then the energy sector with the IPPs and the whole cash waterfall mechanism that's not working. Yeah. We need to also be on the lookout for that.
Thank you, Doc. Mike Kobler, in a minute, your final thoughts.
Oh, I thought I just did that. I believe that there's light at the end of the tunnel. We need to engage, and also to work on our communication strategy. As we engage investors, we should look at our fiscals. I think that is very important. That's very critical. We should look at our social programs and see those that we can cut, where we can make savings and also be able to turn the economy around. But at the end of the day, I think that we must all realize that we are in one ship, and we either sail together or we sink together. And it's important that we come together, dialogue, and see what is the best way forward for this country in the next 5 to 10 years.
Interesting. Come together, make sure the ship doesn't. But some will say the government should take the lead. I mean, Olati, your final thoughts?
Yeah, so we should use the IMF as a platform to develop our long-term growth agenda. We have always gone to the IMF under emergency situation, and when you go there, you are given first aid, and then you are fine, and you go back there again. I think we should have a long-term thinking that the IMF program should have some thematic areas to support our industrialization agenda, to support our long-term educational plans. We should win ourselves out of IMF. There are countries, about 14 countries, that have won themselves out of the IMF, with the exception of Argentina. All the other major beneficiaries of IMF are today not going there again. Talk about Russia, talk about UK, talk about Indonesia, talk about Malaysia. They have won themselves out of the IMF program. Why is it that Ghana, we failed to win ourselves after 17 times of being there? So we should use this IMF program as a platform to support our long-term growth agenda and win ourselves out of IMF.
Some will say that government also has to take leadership in the area of expenditure and cutting their cloth according to the size of the code they want to put on. Some will say that.
We should live within our means and we'll be fine.
Interesting. I know the debate will still go on in your homes, in your offices, about the timing for our program and what government should be doing and not doing in these times. Mike Kobler is an investment analyst and CEO of Synergy at Ghana. Join us via Zoom. I appreciate your time so much. Dr. Thierry Champon, an economist, also joining us via Zoom. I appreciate your time so much. Let the debate go on in terms of this IMF program, what the economy holds for us, and government taking leadership to ensure that there is value for money in every sector of the economy. My name is George Wiafe. Have a great day.